Hi guys, how are you all? Now we have discussed sole trader, we have discussed partnership. The next step is private limited company. Now, private limited or a limited company is totally different thing when we compare it with a sole trader or partnership. The first most important thing and the thing which makes it difficult from partnership or sole trader is that private limited companies are incorporated business. Incorporated. Let's stretch it in a better way so as you can. Incorporated business. This means that the company is a separate legal entity. What does that mean? Let me just write it down first. Company is a separate legal entity. This means the company is a separate legal entity means it is a separate, it is legal, it is an entity. So what happens is, I'm going to explain this to you. Remember, in sole trader, you were the sole trader and this is your business, and this is your customers or other people. If the business can't pay, people can directly come to the sole trader, correct? But in companies, it is a bit different. What happens is that the company itself become an entity. Is an entity. That says it's like a person. It's just like a person. So what happens is that the owners are now the shareholders. So what you have done is that this is the company. It is a big company, and then you have these few shareholders who would invest in the company. So there can be few shareholders who are investing in the company. So they can invest in the company. Now, this company, which is a separate legal entity, this means that the company has few features. And what are those features? Number one, that it is separate from its owner. Not like sole trader or partnership where everything is connected to the owners. So if one owner dies, no problem, the company will still run. If anything happens to one owner, he wants to leave, one dies, one leaves, nothing happens. The company will still run because it's a separate legal entity. A second feature can be, now the company can make contracts. Company, I'll explain this, can make contracts. Earlier, when you were single owner, you would make a contract with this person. I am taking a loan from you, I will pay you back. But now the company would take loan. So the company can take loan from banks. Another feature is that the company accounts are kept separate from the accounts of the owner. So let me just write that down and I'll explain. Company accounts are separate from owners. This means that these are owners, there are many owners who have bought shares, and I will also explain shares to you, don't worry. They have their own bank accounts, right? Everyone would have their own bank account. But then there is a bank account of the company, which have its own bank statement. Company A statement, and it would have its own money coming in and going out. So the company does not rely on the bank accounts of the owners, because there's a shareholders, and I will again explain shareholders. It has its own bank account. Now, remember we discussed company can make contracts, so this company can also make contracts, which means this company can get loan. This means company A will get a loan from bank. So the company can take a loan from the bank, and then the company will have to pay back the loan. Now, in case of failure of paying back the loan, so company is separate from owner. Company A is separate. So if we can't pay back, only company will be sold. So company would be liable of paying back the money, not the owners. Do you understand? This means the company has a limited liability. Which means in case of business failure, only the company, which is a separate legal entity, correct? Here you see it is a separate legal entity. You see this, right? Only the company, legal entity, will have to pay back the loans. Owners would also be called shareholders, and I will explain you the difference between all that. Shareholders will only lose the investment they have made. Now, let me explain you what shareholder is, and I'm going to take you back through all of this again. Alright, so let me explain shareholders to you. So shareholders are also called owners. They are owners of the company. So what they do is they buy shares from the company. Remember, the company can make its own contracts. This point here, the company can makes its own contracts. So they buy shares from the company. What is a share? Share is a paper share, and it has a value. Let's say a share is for $10. What happens is shareholder buys the share. By buying share, he becomes the owner of the company. In return, he gets profit. Now, for shareholder, a profit is called dividend. It's a profit when you buy a share against dividend, against the investment you have made. I'll explain this in a detail. Let's assume this is the same company. Shareholder comes, shareholder pays $10 and the company gives him a share in return. Share. And the share worth is $10. Now, what happens is that after the company makes profit, after the year or so, company makes profit. So it pays all the bills, and from its profit, the company has made a profit, give a percentage of profit to the shareholder. Now that percentage is against the shares he has bought. So let's say he's bought a share worth $10. So maybe he get 1% profit of $10. So he gets $1 as a profit. Now the company has so many shareholders, so not just one shareholder. Company would have 1, 2, 3, I don't know, so many shareholders. Now they all have invested money in the company. They all have purchased shares from the company. And they have all paid. And in return they have received shares. And after the year, from the profit they get, from the company's profit, they get dividend. Now I'll be happy to explain this to you one more time to make it very easy for you. And I'm sure you would have few doubts. I mean, it's a new concept, don't worry, but it's a very easy concept. Don't think much about it. It's just there's a company, and we all know it's a separate legal entity, which means that it can make its own rule. It has its own bank account, it has its own money. Let me write this down. Its own bank account. It can make its own contract. It is separate from owners. So this company now needs investment. So what the company says is, all right everyone, I'm selling off shares worth of, I'm selling 1,000 shares worth of each. So the company is saying, announcing, everyone, I'm selling shares, 1,000 shares, each share worth $10. So please come and buy, come and buy. Now, you would see people running around saying, all right, we want to buy the shares because the company is announcing, and 1,000 shares. So then you would see these shareholders, they will come running towards the company. They'll say, all right, I will buy 1, 2, 3. They say, all right, we buy. So they give $10 to the company. They all have given $10 to the company each. And there are so many shares. I'm just giving an example of just $10. $10. And in return, they have received, the company has given them a share, a piece of paper which is a share. This is a share. So company has given, and now company says, come back to me after a year and I will pay you your dividend. So company says, once I make profit from your investment, I will pay you a return on each share you have purchased. Makes sense, yeah? So, year comes by, these people would contact the company and they'll say, all right, where's our share? The company says, of course, for every share of $10, your profit I've calculated is 1 dirham. And that profit is called a dividend. The company says, profit or return from share investment is called dividend. Company says, all right, your year has come, I've got profit, so I'm gonna give you dividend. So company pays a dividend to this guy, company pays a dividend to this guy, and company pays a dividend to this guy. And maybe it's $1 each. So this is how a company would run. So these guys would roam around saying we are the shareholders. And actually they are the shareholders, of course. We are the shareholders. Because they own shares. Now, because they have own share in the company, they are also called owners because they have invested. I understand. So these are shareholders and they get in return of their investment they get dividends. It's just their profit is called dividends. Now, so this is going on for quite some time now. More and more shareholders are coming in and they're buying company's shares and they're becoming part of the company. Now, they don't have anything to say in regards to how to run the company. They're not running the company. Do not run the company. They just only come once a year and they just get their profit. So they're just more like a sleeping kind of shareholders. Now imagine this happy company has of course some creditors and everything, people the company has bought loan from. So let me put it this way, give you another example or another scenario actually. So this company, again I'll put in the point, it has its own legal entity, has its own bank account, bank details, separate from owners, and you have seen owners are the shareholders, separate from owners. And another point is that so it says legal entity, bank details separate from owners, and I think that these are it can make its own contract. So one of the contracts it made, remember those three guys we discussed in the past, bank, creditors, people who have given the money and given products on credit, they come to the company. and they say, listen company, we have given you some money, you have not returned it to us, you're not getting much sales, your sales are dropping, you're not making much money, uh, we are here to take our money back. So they ask the company to pay us the money. Of course, company is not happy now, it's a separate legal entity and this time it's sad. So they would come in and they would take everything from the company. Company is thinking, I will have to sell all my assets and pay off bank and creditors. On the other side, the shareholders, they're a bit worried because they have invested in the company. But the only loss they will have is the investment they have made. Shareholders will only lose the investment. And what was that investment? Exactly the $10 they have invested in the company. That's it. So the company would be sold and all the money given to the banks and creditors. But the shareholders will stay safe. Now this is called limited liability, that the owners are safe. Now all this, whatever I have explained you, is incorporated business, a business where company is a separate legal entity. So these are all incorporated business. I'll quickly take you through. Company is a separate legal entities. It can make its own contract. It has its own bank statement. It is separate from the owners. The company gives shares to the shareholders, and shareholders are also called the owners. They buy share and invest in the company. In return, they are given dividends. Again, I can write it over here what a dividend is. A profit or a return received by purchasing shares from a company, and they're getting their profit, or you can call it a return, and they're happy. They are enjoying limited liability. They don't have to worry about paying off all the debt if the company goes to the bank or the creditors or to whoever. They are still safe. All they lose is their own investment. In case of business failure, only the company, legal entity, will have to pay the bank the loan. Owners, shareholders will only lose the investment they make. So now we understand what incorporated businesses are. We still need to understand what private limited company is. So let's just jump to it. What is a private limited company? So the private limited company, do you see these owners we have discussed? These owners are also called shareholders, remember? Shareholders. So in private limited company, let me just write private limited over here so we all know. shares are sold only to friends. Write friends in a better way. To friends and family. That's why it's called private limited. Private. So do you see those owners running around here and there? They are all friends and families. So they're all friends and families. So these guys are friends, families, and people we know. Company cannot sell its shares openly to the public. So you cannot advertise your share. Hello everyone, we're selling our share, please come and buy it from us. You cannot do it. Just write advertisement again. You cannot, no advertisement. Like I've said, only to friends and family. Now the people who have started the company still control the company. People who have started still owns, still runs the company. Runs, control. And they, chances are that they might have more shares. People who started the company will have more shares, or maximum shares. Will have maximum shares. Makes sense, right? So for example, these two guys maybe together would have 60% of the shares, and just giving an example, and all of these four will have 40% of the shares. So the bigger ownership chunk stays with the two guys who run the company and who are controlling the company. But company still is a separate legal entity. Not to forget that ever. Another point can be the shares. Shares in private PVD, we call it private limited company, are not transferable. So it's not like you can buy the share and then you can transfer it anywhere you want to. No, it's not like that. You will have to either give it to yourself, or you can give it back to the company. Cannot be transferred. So you cannot transfer, or cannot be sold further. Remember, it's a small. Just think of this as a round table, a long round table. These are the two guys who have started the company, sitting around the round table, and these are the other shareholders. Only these few friends and families can buy and sell the shares. Now, how many are there? 1, 2, 3, 4, 5, 6, 7, 8. All 8 of these are shareholders. 8 owners. These 8 are the owners. There is no other owners, only these 8 owners. 8 owners. And these 8 are also called shareholders. But the idea is that these 2 are maximum shareholders and these 6 are minimum shareholders. But they're all shareholders. Now another point is the accounts, the finances. Remember, it was secret with sole trader and partnership. Accounts are less secret now because you have to share details with all the other shareholders. And not just shareholders, you have to share details with government authorities so that they know that you're not the other 6 shareholders, that you're giving rights to the other 6 shareholders. So now your accounts are not secret. Your profits, sales, costs, everything is known by the 6 people and the government. Now, how about opening up a private limited company? Is it easy or is it difficult? Opening up or setting up? Of course, you need the same few documents you need earlier. Register the company, register the name, and 2 more important documents: Memorandum of Association and Article of Association. Memorandum of Association and Article of Association. So not just the other documents, you will have to have these 2 more documents. A Memorandum of Association would talk about names, of directors, their addresses, how many directors. All these things would be taken care by the Memorandum of Association. It will also talk about the company's branches, how many branches the company has, addresses. But whereas the Article of Association will talk more about the roles of the directors. Rules of the business, rights of the shareholders. So all of these things will then be taken care by the Article of Association. So just very quickly take you through. Setting up the business requires, of course, registering of the company, registering the name. Memorandum of Association will talk about names of the director, addresses, branches of the company, address of the company. Article of Association will talk about roles of all the directors in the company, rules of the business, rights of the shareholders, and all these things. So yeah, these are all the details for a private limited company. We have actually discussed private limited company in this part of the page. So let me just make it separate from the other part, because that other part is simply explaining incorporated businesses. So I understand it's a very lengthy lecture. I'll quickly take you through. I'll take another 2 minutes just to quickly explain how things are. I will talk about, we were discussing private limited company, but before we discuss, we should first talk about incorporated business. So incorporated business is when a company is given a separate legal identity. A company is separate from the owner. Company can make its own contract, makes its own decision. Company has its own account, and all the owners will now have limited liabilities, so they only lose the money they have invested. And what money have they invested? They have bought shares. What is a share? Share is a page or a document you get when you invest in a company. So let's say if you have invested $10 in the company, you will get a share in return. So that share, you keep it with you, and then whenever the company makes profit, you get some percentage by showing that share. So the company will show the share. So you will show the share to the company, and company will pay back to you the interest. Not the interest, the profit. Now that profit is also called dividend. Dividend is simply a profit or a return you receive when you have made an investment in a company by purchasing its shares. Now what happens to the shareholders? Now shareholders are simply the owners of the company. They have the shares. So as long as they have the share, the paper in their hand, they are the owner of the company. They get dividend in return, and but they do not run the company, by the way. They do not run the company. They just stay there, get the shares, and they're out. Now, what if the company goes through a bank loss, a bankruptcy? What happens? The shareholders, they do not lose anything. They only lose their limited liability. If they have a limited liability, they only lose the investment they have made. Remember, we have discussed that earlier. So the company says, I will have to sell off all my assets and pay off to the bank, but the shareholders will only lose the investment. This is what an incorporated business is. Let's now talk about what a private limited company is, which is actually an incorporated business. Now we know the features of an incorporated business, so let's just see what private limited companies. The shares are only sold to friends and family because it's called private. So only to friends and family. Cannot sell its shares openly to the public. Absolutely. Because you cannot advertise, you're a private company, you can only sell it between friends and families. People who have started the company still run the company. So the people who have started, they are running the company. And the chances are they have maximum shares. People who started the company, of course, they have maximum shares. Shares in private limited companies are not transferable or sold. So all the partners, all the shareholders, cannot sell off their shares. They have to sit together, discuss, and probably then maybe they're allowed to. Alright, accounts are less secret now. You have to share your accounts with all the shareholders, one, and you have to share your accounts with the government. So once you have the government, they will take care of everything. Opening and setting up is you do the few things the same as partnership and sole proprietor, which is register the company, you register the name, but there are two extra documents you need to prepare. One is called Memorandum of Association, which is memorandum is simply name of the company, name of the director, addresses of the company, addresses of the director, branches, and all those details. And article of association talks about the roles, what each director will be doing, what are the rules the company is following, what are the rights of the shareholders. So with this, I conclude my long, lengthy lecture of today, incorporated businesses and private limited company. Please do not worry about anything. If you still don't understand, I will be happy to answer this. Write to me through comments, email me directly, however you want it, I'll be happy to answer. Thank you very much.